Now it's time to discuss all things Meta platforms. Here joining us to bring some light on some analyst optimism we're seeing today, I'd like to welcome in Charles Schwab's Jeff Pierce. So Jeff, walk us through this Raymond James note, which I did see, I believe, was a new street high price target, $600 a share. So that implies about 20% optimism for a name that's slightly lower here on the session.
Yeah, slightly lower, likely to do a little bit with some of that Digital Markets Act coming out of the EU and some of the potential fines that Meta could face. But as you pointed out, we've got a new note coming out from Raymond James. The analyst raised the price target to 600 from 550, kept a strong buy rating on the stock. The price target is based on a 25 times multiple of price to 2025 estimate earnings per share. Meta, according to the analyst, the valuation is justified in his view by increased conviction in the AI prospects. He said he's optimistic that Meta will benefit from all their spending, even if the company's total capital expenditure budget would reach an estimated $50 billion next year, saying that they believe the llama and open source strategy is well positioned in the enterprise, and some of the combo of business and consumer AI will improve ad monetization. They said, it's worth noting that this analyst has brought this up about Meta before, and if you look back in April, they named Meta the top pick of the internet sector. They said it was the most credible and durable AI monetization theme across coverage. They also said that their AI work was improving the amount of time people were spending on their products like Reels, which is only making their advertising more relevant. They said the durability of AI is really underappreciated by investors. Now, it's worth noting recently Goldman Sachs has actually shed some doubt on their potential return on investment for AI for a lot of these tech companies. They focused on the high costs with AI, like data centers, power grids, AI chips, all of that, and really questioned whether or not all this spending could justify the returns. They said the cost is also so high that even if you start to see that cost decline, it would have to do so dramatically to make automating tasks with AI affordable. So some different views there, but today, we've got a price increase up to 600, so certainly a high price.
Jeff, going back to April, as you mentioned, this was one of the most crowded trades in terms of analysts. I think the only analyst I remember seeing that was a little bit bearish and had the short call going into that earnings was Andrew Friedman over at Hedgeye Risk Management. Everybody else was saying buy this thing, and we saw what happens when a crowded trade goes wrong. But hat tip to those investors who kind of plugged their nose and bought into that weakness, because it's been pretty much a one-way street back ever since. Now we're about 3 weeks away from the next earnings. Jeff, we'll see how short-term our memories are, because that was a painful trade on that day. It was a massive, massive move lower. This is not a name that is, immune to big moves in either direction. We'll see. I mean, are we starting to see some of that, wishy-washiness here ahead of earnings perhaps spill in today? Because the rest of the mega caps are doing good today.
Yeah, I would say, this upcoming earnings is susceptible to the type of move that we saw in the last earnings report and the one before that, right? If we look at Q4, you see that pretty big move to the upside. You look at Q1, the most recent report, obviously you see that big drop. And part of that drop was what these analysts are talking about. We saw disappointment in the outlook, but the company also planning to increase their investments in AI. CapEx, they said, is anticipated to be between 35 and 40 billion. That's up from the prior forecast of 30 to 37 billion as they continue to accelerate their infrastructure investments in AI. Zuckerberg said on the upside, once their new AI services reach scale, they have a strong record of monetizing that. But in February, if we look back to February, the finance chief, Susan Lee, said Meta's been investing in AI models, and that those can accurately predict relevant ads for users, as well as tools for automated ad creation. That should drive more engagement, hopefully boost more money, and cut down the spending. The good news for Meta, and part of the reason we're seeing them do so well, is ad spending has been stabilizing. We're seeing the economy stabilizing. We're seeing ad spending picking up. It rose 27% year over year in Q1. China-based advertisers have been certainly pushing that number up. Those increased 41% year over year. And worth noting, this potential TikTok ban could happen as early as April 2025. That certainly is probably helping Meta as well. Although on the downside of that, it shows that Meta is susceptible to some of these other platforms. If a ban on TikTok does that sort of push to the stock.
Yeah, and I thought the ban on TikTok was interesting the way when we first got wind of that, it was like the major catalyst. And I was like, this isn't going to happen anytime soon. And it's been that way, I mean, really the better part of this year, as we don't really have any major development on that. But I definitely think will be interesting to watch what happens with that, especially in this, very heavily scrutinized political year ahead of the election. But we will leave it there. Great breakdown on all things Meta Platforms, which I do think is still one of the most influential names in the market, despite some of the weakness we've seen as of late. Lower today, but still seeing a phenomenal 2024 thus far, at least on a relative basis.